As promised to you, the chapter 3 is here, the relay race, how input tax credit works. All of us understood what is CGST, HGST, IGST, UTGST. Now you would ask a simple question that I have paid the taxes. How would I get the credit of the same if I am a reseller? The concept then arrives is the input tax credit. Now let us understand if the manufacturer for the product above charged 1000 rupees and 18% is the GST, then he would have charged 180 rupees as a tax. This tax the wholesaler can set off against his tax liability. For example, if the wholesaler has paid the tax 360 rupees in an example where he would have sold for 2000 rupees, then at the 18% he would have collected a tax of 360 rupees. In that he could set off this 180 rupees and then pay the balance 180 rupees to the government. Now let us understand the relay race. Why it is called a relay race? All of you knows what is a relay race. Now let us understand this in a practical manner. Picture a relay race with four runners: manufacturer, wholesaler, a retailer, and finally the consumer who crosses the finish line. Each runner carries a baton forward to next one. In GST, that baton is called credit for the tax already paid. So here is how it works, how it is played out with the real numbers. As we are given the example of a game, so let us say how it is played. Now the manufacturer buys 1000 worth of wood and pays 18% of the GST, that is he pays in absolute value 180 rupees GST in this example. The manufacturer turns that wood into a table and sells it to the wholesaler for rupees 2000 rupees, charging 18% GST, that is in absolute terms it is 360 rupees GST he would have collected from the wholesaler. But the manufacturer already paid rupees 180 rupees tax on the wood. So instead of handing over to the government 360 rupees, he will adjust this 180 rupees which he had paid to the wood seller and then remit the balance 180 rupees to the net to the government. This is called input tax credit. The next example, the wholesaler brought the table for rupees 2000 rupees plus 360 rupees tax. The wholesaler sells it to the retailer for rupees 3000 rupees, charging 540 rupees GST. The wholesaler already paid 360 rupees in the tax given in the example 1 when buying the table. So they only pay to the government 540 rupees minus 360 rupees, 180 rupees net tax paid. The 360 rupees is the input tax rate which the wholesaler has got. Now let us come to the third one, the retailer. Retailer brought the table from the wholesaler for rupees 3000 rupees plus 540 rupees taxes. The retailer sells it to the consumer for rupees 4000 rupees, charging 720 rupees GST. The retailer already paid 540 rupees as a tax to the wholesaler, which is the input tax credit. So he will adjust this 540 rupees against the 720 rupees and pay to the government only 180 rupees. Now let us come to the consumer. Assume the consumer is you. You pay 4,000 rupees plus 720 rupees, 4,720 rupees for the table. You do not get to claim any credit. You are the end of the line, the runner who crosses the finish line without handing the baton to anyone else, and up what the government actually collected across all the three stages, that is 180 rupees plus 180 rupees plus 180 rupees, it has literally collected 720 rupees in the all the four stages. That is exactly the tax on the final sale price, no more, no less. Nobody paid tax on tax. Each business only ever paid tax on the value they personally added. The thousand of added value at each stage, tax at 18% is 180 rupees. The technical name, let us now come to the technical name. What we have been calling the baton is officially called the input tax rate or ITC. Input means the things a business buys to run its operations, like the raw materials, the equipment, even the services like the rent, the software subscription, as long as they are used for the business. When you pay GST on an input, you can claim that amount as a credit against the GST you own on your own sales, that is the output tax. The formula every registered business is quietly running every filing period is the tax to pay to the government is equal to the tax collected on the sales output tax minus the tax already paid on the purchaser's input tax rate. That is what the chapter 10, the GSTR 3B returns is actually calculating every single month. The catchers, because they are always the catchers. ITC is not automatic or unconditional. A few rules matters. In every play there is some rules. In GST also there are rules. You need proper invoice. If you do not have a proper invoice, you cannot take input tax rate. So you should have a valid GST invoice from a registered supplier. The second rule is the seller have to have actually filed their returns. If the seller has not filed the returns, then you will not get the input tax rate. Seller has to file his returns and pay the taxes for you to get this input tax rate. So you should every time ensure that whoever is your supplier is paying the taxes regularly and filing the returns so that you get the input tax rate without any litigation. The third one is some purchases are blocked from the ITC entirely, regardless of the paperwork. Things like the motor vehicle for the personal use, food and beverages in most cases, and handful of other categories under the Section 17, subsection 5 of the CGST Act. If you are ever unsure whether something qualifies us, that is worth a quick check with the tax professionals rather than guessing. You can give in the comment if you have any doubt, and we will try to give you reasonable answers. But you have to get it validated. If it is a complicated thing, you have to get it validated by tax professionals so that they will check all your agreements and then come to the conclusions. Than without taking a risk. The composition scheme, the chapter 12, when opts out of this system, the composition taxpayers pays flat rate and gets no ITC at all. That is the central trade-off of that scheme, and it's why it's not automatically the easier is always better. Choose it looks like at the first glance. Why this design matters beyond the max. The relay race structure is also what makes the GST somewhat self enforcing. Every business in the chain has an incentive to make sure its suppliers files correctly because their own ITC depends on it. A wholesaler who is careless about the supplier they buy from can find their own credit claims rejected months later at the reconciliation time with no easy fix except chasing down with that supplier. It's a straight kind of peer pressure built directly into the tax system. In short, every business pays tax on its sales, then then subtracts the tax it already paid on its own purchases input tax rate. So the total tax collected across the whole supply chain equals exactly the tax on the final sales with no double taxation anywhere along the way. Now we will be going to the chapter 4. Hence, the chapter 3 is completed and you would have understood the input tax rate. If you have any doubts, give in the comments. Whatever reasonable we could help you, we will try to help you out by giving the reasonable answers so that you would be understanding the concept clearly and implementing in your business with a caveat that these are not a legal opinion. It's a educational video and only we are helping you to understand the concepts clearly. So don't try to implement directly into your business without going through with due diligence. Hence, it is always said take the help of professionals before coming to a conclusion. Have the knowledge to ask the right questions to your tax professionals so that they can guide you in a better way. Subscribe to the channel and hit the like button if you like it and give the comments whatever you want to understand further. Thank you and God bless you.